Good afternoon and welcome to GrainTV. It's February 25th, 2013. I'm Logan Burgess. Joining me to my right here is Brock Schimenel. Well, Brock, let's jump into fire tip here, see how the grains did on a Monday. As we can see, we had corn up 3 cents on the March contract, soybeans down 8 1/4. We had Chicago and Kansas City wheat both moving lower as well, down 16.5 in Chicago, off 18 3/4 there in Kansas City. Guys, if you want to get live quotes at your home or office, visit us over at grainhedge.com. You can take a no-obligation demo of the platform that you see here. But Brock, can you kind of break down the action for us today? It seems like fundamentally we had a lot of news that was helping this grain market move lower. We had a dollar index that was strengthening a bit today. What was kind of pushing things in your mind?
You know, I think the outside markets were lending some pressure to the downside today.
Okay.
We did see the Dow Jones off over 1.5% today. We saw S&P falling sharply. We saw a dollar index, like you said, was up sharply as well. So that's in general going to pressure the commodity complex as well. Corn was the only positive note here, but we did start negative on the day for corn, but we did end up slightly positive. We continue to consolidate right below that $7 level, which is continuing to be an important level to watch. But I think the potential right now is for the corn market to move, continue to consolidate and move lower and grind a little bit lower here over the next few sessions.
Yeah, absolutely. You know, this morning we did, as you said, outside markets seemed to weigh on things. Fundamentally, we have some snow coming through for a large area of the southern plains. That certainly helped move things a little bit lower. But we had the export inspections report out today. Certainly not a good showing for the grain market.
Yeah, all three grains missed their marks on the low end for the export inspections expectations.
Right.
If we look at the numbers, wheat came in at 21 million bushels exported, corn was 11.5 million bushels exported, and soybeans was at 27 million bushels. So all those are on the low end of expectations. If we take a look at where we stand for this marketing year, you can see that we continue to run well ahead of pace on the soybean exports. We still are 208 million bushels ahead of pace, but we did fall 8 million bushels on that pace to meet the current USD projections. So it's been the same story as we move throughout this marketing year, even though we are starting to slow up a little bit on our exports.
Yeah, you know, Brock, just looking at soybeans for a minute, we did have a story today that some people are talking about the U.S. becoming an importer of soybeans from Brazil. Certainly a realistic possibility given very tight U.S. stocks and a huge crop coming out of the fields down there. So we'll have to keep you posted on that here on GrainTV. Unconfirmed report, but a developing story. Certainly very bearish for price action here in the U.S. Really, though, if we look at corn here in terms of where we are to meet those USDA expectations as well, corn just continues to kind of disappoint on the export front. This week we slipped 5 million bushels. We're now 52 million bushels behind the pace needed to meet those USDA expectations. So certainly corn kind of continuing the story here we've been talking about throughout the marketing year, but soybeans really a cause for concern right now, I think, fundamentally.
Yeah, you know, going forward, we expected that some of the sales would be starting to turn to the South American crop down there as they're starting to get out of the field. I think I saw today they're 28% complete on the harvest in Brazil. So that's going to continue to weigh on our markets as we move forward. And if we continue to see the slowing exports pace in soybeans, we should start to see some of the price action move lower as well in the soybean market.
Yeah, absolutely, Brock. Let's hop into a weather slide here real quick, basically breaking down the areas that are expecting snow right now. As you can see here, the area highlighted in red is areas that's expected to get 4 inches or more of snowfall here over the next couple days. So certainly the subsoil should get another good shot of moisture there across areas of southern Kansas, northern Oklahoma. Certainly very good to see. Those guys are hurting right now. You know, we're going to need more of it to close this gap here left over from last summer's drought.
Yeah, this precipitation in the southern plains has really been weighing, in particular on the Kansas City wheat market.
Right.
We saw that down over 19 cents today. You know, we've been off pretty sharply ever since last week when we saw a first round of precipitation come through, and we're looking for another 10 to 12 inches in some of those areas that desperately need a good dousing of precipitation to help that winter wheat crop that is starting to come out of dormancy.
Yeah, right. As we know right now, the good to excellent rating on this crop is historically extremely low. Certainly could see it improve a little bit here with some of this precipitation. But let's kind of switch gears here for a minute. On Friday, we did get the Commitment of Traders report, and normally we kind of look at this report to kind of get an idea of where the fund money is in this market. But last Friday's report, especially for corn, I thought had some important things to take note of here. If we look at this chart here, the blue line is net long positions held by managed money in terms of number of contracts. And as you can see here, they've certainly been liquidating their net long position here in recent weeks. Now holding about 100,000 contracts net long. But I think the important thing to take note of is that if we look into these numbers a little bit deeper, while they are taking longs off the table, Managed Money is actively adding shorts. So they're not just saying we don't want to be long this market, they're saying we're looking for some downside. So certainly it seems like the fundamentals in corn have been bearish here recently. The technicals are really starting to support that now. Not able to get above $7 a bushel on the front month here. Certainly now we have the funds saying that they're kind of in this boat as well. Certainly opens the door to more downside here for corn.
Yeah, I'm right there with you, Logan. You know, most of the potential, I believe, does lie to the downside, especially in the corn market.
Yeah.
Soybeans, I think, is definitely getting pressure to the downside as well. We've seen a substantial sell-off over the last couple sessions. You know, following Friday's session, we saw a sharp sell-off. We saw it again here today, down another 9 cents.
Yeah, absolutely. Well, I think that kind of wraps up in general what we saw today, Brock. As we said, you know, a lot of bearish fundamentals out in this market today. Certainly tomorrow could be another day, and we'll be reporting on that here on GrainTV. Thanks a lot for joining us, guys, here for Monday. Have a great evening. We'll see you tomorrow.